Age group to buy investment properties?
Personally, if you ask me, the earliest they can save some money and get into property market, the better. That's the because what I've seen is maybe there's certain small dips in the property market, but in general it's more stable and it's going up. So the earlier they get into the market, they're better positioned to increase their number of properties. Nothing wrong in buying a little bit later. That gives them maturity and more, information wise. But the later you leave it to, your ability to buy multiple properties will reduce, probably because of age and other reasons. So if possible, earliest would be good. I mean, having said that, property is not something small, so they need to save a lot. They have to work hard first couple of years until they have enough for buying a property. But at least if they start saving early, they can buy property early. So that's my take on it. I mean, if there is a extremely risky situation where you think it might drop, you can wait for 6 months, 1 year, 1.5 years, 2 years, just to make sure that the situation is stable. But apart from that, I would say as soon as possible they should get into property in general. Property has done very well in Australia, and my feeling is that it will continue to do well in future as well. As soon as possible would be good. Yeah.
Does interest rate hike affects the property market?
Okay, in general, if the interest rate goes up little bit, it doesn't make a huge difference to property market. But when government specifically wants to bring down the price and increase the interest rate dramatically high, not the government but RBA, I would say, then it is bound to sort of drop. There's nothing we can do. It is one of the macroeconomics which we all have to, whether we like it or not, it happens. And unfortunately, it's going to drop in prices. And that's because the government prefers to bring it down to retain, pardon me, to retain the level of inflation which is more sustainable for the overall economy. So what they're doing is good in the long term. So that's not something we control. People might say, interest rate will definitely not go up or definitely not come down, but they're all they're all assumptions. So these are based on data, inflation and other figures. And there's a huge authority, Reserve Bank of Australia, which take decision and very clear-cut guidelines. My point is that yes, it can make a difference, but in long term, there will be ups and downs with interest rates. See, property is a long-term investment. So you're looking at 20, 25, 30 years of investment. So there will be a lot of increases in interest rates. There will be a lot of decreases in interest rate. So you can't predict for 30 years. So you have to take a chance and get into the market at some stage. You may delay a short period of time because of interest rate and other factors, but you can't predict over 10 years what's going to happen or 15 years. So that's something which you can't do, and there's no point not investing or deferring investment because of that. So my preference is look into long term, get into that. The other factor is the rents. Generally what I've noticed is when the interest rate goes up, the investor does not completely bear the brunt. So one thing is, for example, if it's under negative gearing for that matter, so they'll lose more money because they're paying higher interest, which means part of it they might get back as a negative gearing component from the tax office. So they might not necessarily, say for example there's a increase of $2,000 because of interest, so they may not lose all the $2,000 from their pocket. So assuming that they're on 42% bracket, they might lose 58%, 42% might come back from tax office. Also the other component is the rents might go up. Rent do not directly associate with the interest rate, by the way. A lot of people say it does, but what I've noticed is rent is purely based on supply and demand in a particular location, definitely not on the interest rates. But having said that, in general, when the interest rate goes up, chances are most investors also want to pass on some part of it to the renters, so tenants will end up paying part of that increase. So if there is 2,000 increase per year, chances are $800 might or $900 might come from the tax benefit, 500 or 400 might come back from the tenant, so they might still lose some part of it because of the interest rate rise. But having said that, these things, there will be a lot of variable factors, so they have to be ready to take these things as they come. For example, macroeconomics, they can change. There's nothing we can control. There could be war in Ukraine and something else. Suddenly people coming to Australia might increase or reduce. They can affect like rentability and all these things. So there will be some macroeconomic factors which are driving the property prices and rental. So you have to be ready for all these things because property is for long-term investment, 25-30 years investment.